Just wanted to make a quick video on Bookmap, what it is, how I use it, and give you some samples. First off, I use Bookmap on ThinkorSwim. It's a free version for the ES. If you don't have it, I highly recommend it. Also, they have bookmap.com, which is a very full version of the product, which offers more, indicators and other neat little tricks that they have there. But I don't use the full version. I just use the free version on ThinkorSwim, and it has extremely helped my trading as far as entries, even staying out of trades maybe, and then just kind of overall helps my intraday trading. This is an intraday tool mainly because it's live, it's order flow. It's not for swing trading really, like over a couple days. It's more intraday trading only, mainly because the levels are there and they, just that period of time. So what is Bookmap? It's just really areas of support and resistance and how I use it. Open orders over here. You can see it's order book right here. These red and orange lines are the higher amounts of liquidity. So you can see in this particular example right here that we have 200, 300, and 137. You can see that's relatively high in comparison to these other lower amounts. What I do like about Bookmap is that it shows you the historical nature of it, of the actual contract. So for instance, this area up here at 40.58, you can see that it's yellow and it gradually turns to orange to red. That's telling me that the orders are building. So that's telling me that area might be getting stronger as far as resistance in this case, because it is above price. So it's something to keep in mind, which I like, because it's like almost like historical order flow, and it's kind of neat because rather than just looking at strictly the open orders, you could see a lot more how long they've been there, when they came on, and it's just a better picture of what actually is happening right now in the market. So that being said, what I do every morning is I take these levels, these higher areas of support and resistance as far as the contracts go. I plot them on my chart, and they work very well as far as intraday support and resistance. Even when the market opens, if I see some areas open up with higher contracts, I'll mark those too, because they're likely going to play a key role in my intraday trading strategy, because I'm a levels trader, and these are good levels, and when they overlap with certain other levels that I use, the ATR and pivots, which I'll get into in a little bit with some samples. But I just wanted to go over a little bit about Bookmap and what it is. So if you're seeing these contracts and lines above price, they would be resistance or targets. If you're seeing them below price, that's going to be support and a target. What I also like to use is cumulative delta, which is right here, and cumulative delta is really just a net buying and selling in that given time. So what I look for, if you see down here, you see it's positive, that means there's net buying. If you see it red, that means net selling. I also look for a flip in cumulative delta. So if it goes from red to green, that's telling me the buying pressure is subsiding, and it flips to green, so that means buying is coming in. So something to keep in mind. And also I like to use this as to combine with other indicators, like I said, Fibonacci pivots and ATR levels. And when these levels overlap, it's actually a pretty strong areas of support and resistance. For my first example, just to kind of give you an idea, so every morning I would open up Bookmap. This is what I see. I would plot these levels, these orange levels, so in this case 38.65, and then down here you have some bigger ones too, and here you'll notice a cluster of bigger orders. That's telling me that's pretty strong support. So I would be looking for a bounce right here, and that's how I'm looking at this. So I would say, all right, 38, they have 240 contracts, 200 contracts, and 220. That's going to take a whole lot of selling pressure to get through all this and continue down. So what I would do is, I would look to go long here and then see if we get a bounce off this high area of support. If for some reason this breaks, okay, then these next higher levels over here of demand would be my targets. Just because this is so strong right here doesn't mean it's always going to hold. You always have to take into account cumulative delta too. So you can see in this case we have the price coming down right here into support. We also have cumulative delta coming down. So that's telling me selling's good. Cumulative delta right here, 4,000, anything between 10,000 or less is really considered average. I typically see 5,000 to 6,000 a day. If you get over 10, negative or positive, that's like really heavy selling or buying. So just something to be aware of. But I just want to give an overview of this and how I would approach this situation. Also, this right here is the VWAP. It's custom default settings in Bookmap. So just something to be mindful of as well. It does work pretty well as far as support and resistance when we come and tag these lines. This is my second example. So you can see that in the morning what I did is I came in here, I saw 3900 as a high level. You can see 700 almost. We have some 200s down here. That's what I highlighted at. So I kind of marked these levels on my chart. And I trade in MbTrader too as far as my main trades, and I just use ThinkorSwim or Bookmap as more of a trading tool. I don't place my trades there. In any case, this particular day, I marked off this level, where is that? 3820 right here. So what I do, I set these highlighted areas. These purple ones are maroon. They're the pre-market liquidity that I set. These green lines are my ATR levels, and the pivot points are the yellow, red, S1, S2. So in this particular example, 3820, right here, you can see I set my level here. You have an S2. You have a pivot point too, and look where that bounced off of. Boom, boom. Perfect example of a overlapping area for a good support and entry to buy. This area right here, 3840. This probably came on. You have some liquidity here. This 3840 might have built up a little bit. After market open, I probably added that, and you can see right here how much it bounced off this area because that was a high liquidity area. So and then this level right here is about 38, 35, 50. So here's a decent order, but like I said, some of these levels are added after pre-market and market opens. But you can see how these levels of open contracts can act as support and resistance, and when they overlap or around other ATR levels that I use, you can see how it reacts pretty good. I also like to use it as divergence, as I said, using a cumulative delta. So here's an example from one of the days I traded. You can see right here that price is consolidating pretty good in this little area from 3740 to 3747. It's consolidating, chopping around. All of a sudden you see this unusual spike in cumulative delta. That's telling me buying pressure stepping up. You can even see the little volume bar. You can even see the little volume bar right here. But price is still coming down, so that was a little strange. You're coming into like a good area of support. You can see the open contracts right here. So I kind of watched that. If you follow me on Twitter, you would see I would have posted this as far as like my textbook divergence play. So I saw that, noticed that. A couple of minutes later or whatever, you can see we actually came down and tested this VWAP right here, which kind of held as support. I told you this VWAP kind of acts as support and resistance. But you can see as we kept going down, the cumulative delta still remained relatively strong despite this little drop off right here. So that's telling me, you know what? There's buying pressure coming in despite what the price action is actually doing. So what I looked for, if you can see this right here, I drew the little channel down, broke through the channel, and it just took off. So what kept me, or what got me into the trade, was this cumulative delta. You have price coming down, and cumulative delta going up. That's divergence, and that's telling me, you know what, it might be time to go long, because this selling pressure right here in the candles is really actually not as strong as you think. So it could be time for a reversal. So as you can see, once it came down, cumulative delta is still remaining strong, and boom, popped off. I think it actually went a lot higher this day, but this is how I use cumulative delta as far as divergence goes. Next example is the delta flip. So what I mean by that is when cumulative delta, you see this go from red to green. Usually when that happens, especially when you're extremely negative and you flip to positive, so you can see this day we were almost negative 10,000, and it gradually came up. As soon as you had that flip to buying, going positive right here, and net buying, you can see it just took off. So what I do is, in this particular case, you can see it pulled back to that VWAP, and then it flipped. So that's telling me, wow, the buyers are actually stepping up here and coming in. Boom, depending on other levels I have on that day, maybe I get in there or catch it wherever. However, you can see it bounce right out the VWAP, but that's the flip. On another day, this is what happened. So you see price is kind of consolidating over here, and then we have this flip. Same thing with the actually divergence. You can see we're consolidating, but the buying pressure is kind of flatlining. In any case, once we had that flip, it did bounce, but this would be the area to short because it bounced really good here, tested these levels, failed again, and we had the flip. So right here, once if I was in this market and I saw it flip to negative when we tested these two previous highs, that's telling me a short all the way, because that's telling me, you know what, buyers are stepping in here, it's getting real, and it's net selling now, and that's why you see it kind of came down. So that's why I look for in a cumulative delta flip.